A major development is taking place behind the scenes at the moment, but the general public will not be informed until it has begun. More intricate details than ever before surround Lord Belgrave's return. He asserts first-hand knowledge of the dealings between Ripple, XRP, and major international banks. Belgrave has long boasted about his background as a banker in the City of London, where he was a member of the decision-making group that oversaw the development of new international payment systems. His recent revelations have the potential to drastically alter the future outlook of XRP holders. Before we jump in, I've put together something strong for you if you really want to know how the top 1% are placing themselves before this next phase arrives. A blueprint for becoming an XRP millionaire, that is. A comprehensive document, infographic, and video breakdown are all a part of it, and they reveal how the most powerful investors are subtly getting behind the XRP ecosystem's upcoming events. You should start studying it immediately if you want to be at the forefront of the next wave. In the pinned remark that is located beneath this video, you may find the link to the XRP Millionaire Blueprint. Now let's lay the groundwork. This was a late afternoon meeting in a private boardroom in London, gazing out over Canary Wharf, the UK's financial hub. Senior executives from 3 of the biggest financial institutions in the world were seated around the table, with officials from Ripple also present. According to Lord Belgrave, he was present in his capacity as a director responsible for the strategy of cross-border settlement. We weren't talking about theory. What if, wasn't it? It all came down to execution. Data predictions, spreadsheets, and cost models covered the table. The results were clear-cut: efficiency graphs, liquidity flow models, and a verdict. The significance of this interaction becomes clear if you grasp the mathematics. 1 million drops is 1 XRP, and roughly 10 drops is what an average transaction uses. 0.00001 XRP is all it is. Assuming the value of those 10 drips stays below $1, the cost effectiveness is unparalleled. The meaning of that was crystal clear to every executive present. A wider range of profits is possible, costs to clients may decrease, the time it takes to settle a case might be reduced from days to seconds. When that happens, it completely changes the way banks operate. Nevertheless, one more piece of the jigsaw puzzle remained: following instructions, verification of identity, KYC-AML. The banks were honing in on that. Reason being, scalable profitability, global transparency, and quick settlement will become the norm once these technologies are completely integrated with the XRP ledger. Everyone in the room could see it coming that afternoon, according to Belgrave. Already engineered was the future of international money transfers. Today, as the result of all that, Belgrave has dropped hints about these behind-the-scenes deals for quite some time. The Non-Disclosure Agreement System, NDAS, which includes Ripple, payment industry heavyweights, and central banks. Now he's making a comeback to claim that nothing major has changed despite everything that has happened. Everything is going according to plan. According to him, genuine change doesn't announce itself. After working in international finance for a while, it blends in undetectably. Give that some thought. Reason being, we are currently witnessing that very merger. Some other item he said not long ago piqued the interest of influential XRP users. In the UK and the EU, plans are quietly taking shape for a major XRP ETP, an exchange-traded product. Institutional access, custodial solutions, and regulatory frameworks are finally converging, he argues. It has the potential to open the floodgates to a new era of compliant liquidity once it goes live. So what does that mean? Was his exact words. As for why those 2 cities specifically, I'll explain it in simple terms. As a European strategic anchor, London is vital to Ripple. It isn't haphazard. In the very center of the city's financial district, Ripple has been actively growing its footprint. What exactly is their objective? To collaborate closely with financial institutions, regulators, and banks on tokenization, liquidity management, and digital asset-based cross-border settlement. Almost nowhere else in Europe is the regulatory landscape changing at the same rate as London. The United Kingdom is doing its best to shape rules around digital assets with an eye toward their practical use. Ripple is taking part in these talks to make sure their XRP liquidity solutions are in line with the new regulatory boundaries. So when Belgrave says, "Watch London," he's indicating the launchpad, which is where XRP products that are suitable for institutional use, such as possible ETPs on the London Stock Exchange, will be launched first. Frankfurt, please. The Deutsche Börse and the Xetra Exchange, which lists the majority of important European crypto ETPs, are located in Frankfurt, Germany's financial center. It serves as a central location for liquidity infrastructure, regulatory clearance, and institutional custody. And there are a number of alliances and businesses that are associated with Ripple, and they are all trying to put up digital asset investment vehicles that are compliant for European investors. That's how it works in reverse. You can't just call London and Frankfurt cities. They are the two main forces behind Europe's institutional finance. A huge development will occur when they reach an agreement on XRP's infrastructure and regulatory approvals. A complete rollout of XRP-based products to institutional investors. Step back for a second. That wasn't all that Belgrave did. According to what he said, Ripple's innovation is already interacting with the same infrastructure that powers international payments from Visa Direct, MasterCard Send, and American Express FX. None of this is coincidental. Consider them testbeds. Distributed ledger technology, which settles in seconds rather than days, is stealthily displacing the old financial rails. What Belgrave said was quite clear. Messages are giving way to value transfer as the method of settlement in the future. It's a significant change. Worldwide money transfers have been facilitated by messaging networks such as SWIFT for many years, automated systems that transmit payment instructions but do not store value. Thanks to Ripple's innovations, we're entering a new era where the value is linked to the communication, prompt resolution, quick affirmation, complete candor, and that metamorphosis doesn't necessitate a news release, as Belgrave points out. A new standard is gradually but surely being implemented across the world through pilot initiatives, partnerships, and infrastructure enhancements. For XRP holders, this is important, therefore let's discuss that now. A complete shift in the liquidity structure occurs when institutions start settling actual value on chain with XRP. XRP's function shifts from that of a speculative asset to that of a fundamental liquidity mechanism supporting daily flows totaling trillions of dollars. That's why there are some who have been keeping tabs on the little reduction in XRP supply, a growing number of large wallets, and a decreasing number of medium-sized ones. Powerful institutions are stepping in. Retail inventory is decreasing. Preparations are underway for a future in which XRP mostly stays on its intended track. Institutional settlement and on-ledger utility. Do not trade books of exchange. When an asset designed for institutional liquidity becomes stuck in retail-driven speculative venues, price discovery gets skewed, as Belgrave indicated, and nothing else. Until XRP follows its intended path, its true worth will remain hidden, and that moment is right around the corner. The identical pattern can be seen in other contexts, including banking, tokenization, derivatives, and international payments. Hidden layers of financial infrastructure power the global economy, and that's exactly where Ripple's technology is being implemented. That is why it is critical to comprehend the complete strategy of XRP's stance at this moment. I created the XRP Millionaire Blueprint for this same reason. Theory is not it. In it, every detail of the top 1%'s covert preparations for the new liquidity period and the alignment of institutional structures is laid bare. It covers every single thing. A comprehensive text, an intuitive infographic, and a straightforward video tutorial to help you understand the big picture and put yourself in the best position possible. The pinned comment beneath this video currently has it. Things are about to get interesting from here on out. Belgrave also made a connection in that thread between Ripple's infrastructure and derivatives in the future. He made the astute observation that the derivatives market alone has a larger total notional value than all other financial markets put together, anything from stocks and bonds to real estate. Also, interest rate swaps are the biggest part of that market, and they're worth hundreds of trillions of dollars. The present method is inefficient, opaque, and necessitates a large number of middlemen for clearing and verification. Hence, blockchain settlement is well suited to these types of instruments. A multi-trillion-dollar bottleneck might be turned into an instant, transparent network with the help of Ripple's distributed ledger technology, which could simplify the entire structure. We're discussing the possibility that the biggest financial transactions in the world, including futures, options, swaps, and tokenized assets, may incorporate XRP-based settlement directly. Keep in mind what Belgrave stated. The old financial system does not crumble suddenly. Through interoperability, it seamlessly integrates with the new system. Right now, that is taking place, because the true scope of Ripple's covert development becomes apparent when one grasps the concept of derivatives. The narrative moves from technology to transformation at this point. Put another way, the sum total of all products and services provided by all countries on Earth amounts to almost $100 trillion. This is known as the global GDP. Huge, isn't it? But the contracts based on that value in the real world, the derivatives market, measure in the quadrillions. These include swaps, options, futures, and forwards, agreements on money that are contingent upon the value or rate of another entity. It is necessary to clear, settle, and verify each of those contracts. Currently, that is managed by a patchwork of antiquated systems. Costing billions of dollars annually, reconciliation requires manual inspections, custodians, counterparty risk managers, and processes that can last days. The distributed ledger technology developed by Ripple changes the equation entirely. A transaction is not only messaged, but also completed by a blockchain. That's been lacking in conventional financial institutions. Instant, verifiable settlement that eliminates the inefficiencies, risks, and delays inherent in the existing system. Belgrave dropped hints that Ripple's technology, originally developed for international money transfers, could be readily adapted to power these enormous derivative networks. During those initial meetings in London, he hinted at this being the destination when he gave the cost models and efficiency figures. The transfer of financial instruments, contracts, and responsibilities will follow when XRP demonstrates its ability to swiftly and safely transfer funds across borders. For that reason, Ripple's alliances extend beyond financial institutions. All over the financial sector, they have been collaborating with payment processors, fintech platforms, and global liquidity networks. An intriguing new initiative that has piqued the interest of the community is Evernorth, a business that is directly in line with the transparency principles set out by Basel III and ISO 20022. The goal is audacious: to establish the first ever public-private XRP Treasury liquidity hub connecting Ripple's institutional escrows, where XRP is issued programmatically, to retail markets, where XRP flows freely. Think of it this way: there will be a single treasury pool formed by two sources of liquidity. Daily XRP transactions take place on one hand via retail exchanges, decentralized platforms, and payment corridors, whereas XRP is released in a regular and compliant cadence by Ripple's institutional escrow. A transparent liquidity system managed by algorithms is created by Evernorth's approach, which unites these streams. Try to picture it as a creature with a mind of its own, an electronic rhythm that beats in time with the rhythm of international money transfers. This system has the potential to function as an autonomous worldwide treasury, with transparent and manipulatable liquidity flowing continuously between retail and institutional layers, made possible by automated governance and verifiable smart contracts. This kind of project has the potential to transform over the next decade from market participant to market protector. Algorithmic guardians of liquidity that maintain equilibrium between supply, demand, and cross-border movement. Let me explain the significance of that. The point of XRP was never to be a commodity for trading or to collect dust on exchanges. Transferring funds between other countries, financial institutions, and asset types was its primary goal. With the rapidity of data, retail circulation is losing ground to institutional liquidity, according to Belgrave and others familiar with these dynamics. As a whole, the market will change. Speculation will not lead to the discovery of prices. Utility will be the source. The pricing equilibrium is automatically adjusted when the amount of real-world liquidity exceeds the available XRP float. As far as the community is concerned, that is the Shane Ellis theory. This isn't a forecast, but it does explain how digital assets linked to real-world settlement experience vertical repricing occurrences due to limited liquidity and increasing volume. If you want to put it another way, the market rebalances itself when trillions of dollars worth of XRP must pass through a limited supply. However, this change does not occur as a result of buzz or unexpected declarations. It takes careful, methodical integration for it to happen. One hallway, one building, and one set of rules at a time. Symptoms of it are already appearing. Now, Ripple is an integral part of the same underlying financial system that supports international networks for Visa, MasterCard, and American Express. In anticipation of a future in which value settlement supersedes messaging, several of these systems are covertly experimenting with distributed ledger backbones, and they process hundreds of millions of transactions per day. It was articulated by Belgrave. The narrative is crafted by governments and media outlets following the meticulous execution of the plan. Global finance develops in that way, deftly, strategically, and ahead of the curve when it comes to public perception. The change has already taken place by the time it becomes apparent. Consider this for a moment. When those decentralized payment systems become online on a worldwide scale, what will happen? Imagine a world where all international money transfers, remittances, and interbank payments are powered by XRP liquidity and run on tokenized rails. What would happen then? Size is the key, massive magnitude. And that magnitude extends beyond monetary transactions as well. It goes on into tokenization, the subsequent wave of trillions of dollars. Putting actual assets on blockchain is what's known as tokenization. Anything from art to bonds to equities to commodities. This is now a priority for all of the big financial institutions. Almost every G20 authority has recognized it, including the World Bank, the IMF, and the BIS. Coins will rule the financial industry in the future. Global asset tokenization might reach $20–30 trillion by 2033, according to estimates. However, the actual figure might be substantially greater. That is, unless interoperability frameworks, rules, and jurisdictions are fully developed. Who do you think is seated squarely in the middle of that shift? Ripple. From the start, the XRP ledger could manage any type of tokenized value. quickly, easily, and with decentralized exchange capabilities already built in. That's the secret of its effectiveness. It is possible to transfer tokenized corporate bonds, dollars, euros, and gold all through the same network. Just one layer of universal settlement, one train, and one standard. Your money is not being advised by this. Envision a decentralized financial system where XRP liquidity powers all transactions and tokenized assets, funds, fixed income, stocks, real estate, stable coins, and treasuries circulate over a single network. Payments are made instantly, openly, and verifiably. The future that Ripple is creating looks like that. That is why long-term worldwide acceptance, not short-term speculation, is where XRP's real value is. Blockchain is evolving behind the scenes, much like the internet was silently integrated before changing the world. XRP was designed from the beginning for institutional-grade liquidity. In the utility phase, when demand is based on actual settlement and not hype, XRP is entering as Ripple's enterprise solutions expand. If DeFi wants to supplant TradFi, it must replicate all of TradFi's tedious tasks, as David Schwartz so aptly put it. That is precisely what Ripple is aiming to accomplish by constructing the monetary foundation of the value-based internet, where data travels at the same pace as money throughout the world. Building trust, compliance, and interoperability, they have been working to bridge the gap between blockchain and traditional finance for over a decade. That bridge is nearly finished today. With this new integrated framework, financial institutions, payment processors, and networks may tokenize, store, trade, and transfer value more quickly, cheaply, and transparently than with any previous system. Many on the inside, including Lord Belgrave, have been dropping hints along these lines. A methodical transition from analog to digital value networks. And it's more than just theory now. These days, tokenization, liquidity hubs, and real-time settlement are staples at every big financial summit across the globe. None of these places have a different message. Railroad tracks are shifting. The financial technology company Ripple is also not sitting on its hands. They're hard at work constructing it. There is a piece of the puzzle in every partnership, pilot, and compliance milestone. This isn't just a banking thing. It's all about reimagining the very essence of fast, frictionless, global value transfer. Nothing happens by chance in the banking and finance industry, as Belgrave pointed out. All of the current developments, the collaborations, the policy modifications, and the covert testing are components of a long-term, painstakingly planned strategy. A new order has arrived, and the old one is crumbling. Financing that is decentralized, open, and tokenized, supported by verifiable liquidity and unchangeable truth. What comes next can be discussed now. This isn't just a case of random volatility, folks. It's the preamble to the next worldwide monetary reset. Also, this reset is happening right now, regardless of how people feel about it. The world's leading financial institutions, the Federal Reserve, the International Monetary Fund, and the Bank for International Settlements, have secretly come together on a single proposal, putting physical assets into digital tokens, investments in bonds, stocks, carbon credits, property, and commodities. The digitization of all physical assets is allowing for instantaneous international trade. The crypto dream has ended. The biggest banks in the world are currently putting this operational change to the test. Financial institutions, such as BlackRock, Citi, HSBC, and JP Morgan, are establishing tokenization divisions to provide digital representations of physical assets. Most people still fail to see this portion. A neutral settlement layer is necessary for the unrestricted movement of these digital tokens. Ripple has spent more than 10 years developing that layer, a link between centralized liquidity and more conventional forms of financing. The on-demand liquidity network provided by Ripple will be indispensable when tokenized currency is the norm. That's not all it is, an option. It's the foundation. Take a peek at what's going on in the background now. Ripple has deliberately positioned its liquidity corridors spanning Latin America, the Middle East, and Asia. So long as the West stays put, these areas won't budge. Rails based on XRP are already being integrated. Ripple is now authorized to transact in digital assets in the UAE's financial center. Pilot initiatives in Singapore have been approved. The SBI in Japan has created a whole ecosystem centered on it. Additionally, financial institutions in South America are testing the use of XRP as a settlement token for fast cross-border transactions. Simplicity, intricacy, and deliberateness characterize it. At the same time, the story is beginning to catch up in the United States. News articles predicting the rise of instant payments or the evolution of international settlement methods are actually code. Ripple has already mastered the infrastructure that lies behind the buzzwords. Always keep in mind that the original intent of the SWIFT system was not to facilitate the transfer of funds in real time. Not a settlement method, but a message system. It was effective back in the 1970s, but it doesn't work now in this tokenized society. Because Ripple's technique eliminates friction altogether, this problem is solved. It takes seconds, not days, to transfer value. The pace of money circulation, known as capital velocity, will therefore skyrocket. For the next 10 years, this will be the engine that propels international markets. With the advent of quick settlement, liquidity may flow freely across all markets. It can go wherever quickly and easily. And XRP, the asset that drives that movement, will serve as the system's foundation. Time is of the essence at this point. Risk assets increase as a result of central banks lowering interest rates. The market knows that to be true. We witness more than just a rally, we witness a transformation. When they do it in a context where tokenization is speeding up and liquidity infrastructure is changing. This is the rationale behind institutions amassing wealth in secrecy prior to it making headlines. They are aware that XRP's subsequent gain is due to its position as the central utility asset in a trillion-dollar ecosystem, rather than mere hype, after the switch is flipped and value begins to flow across tokenized rails. We are currently in the midst of the institutional consolidation phase. The well-heeled are making moves as the public's focus shifts to meme currencies and speculation. Infrastructure, custody solutions, and liquidity pipelines are being put up by custodians, family offices, and sovereign funds. Real utility is what they're getting ready for. That's the reason behind the accumulation of wallets. That's why some of the biggest names in finance are secretly teaming up with Ripple. That is why monetary authorities are banding together with interoperability standards that identify XRP-compatible platforms. We will not be delayed any longer in receiving the story. Here we can see things unfold as it happens. So in response to the question, will XRP ever move? They should rethink their question. When the system switches to tokenized value, which asset will be able to transfer it? That is the true question, and the correct response is XRP. You can't call this a forecast. That is a structural certainty. Equilibrium in liquidity is being achieved while the tracks are being installed and the corridors are being connected. Whether it's about CBDC interoperability, tokenized treasuries, or real-time settlement, every big announcement is leading to the same base. Keep in mind that long-term players are now accumulating as markets tighten, liquidity crunches, and anxiety returns. They are aware that this is where the next expansion will start. No one is keeping an eye on the charts. They're observing buildings. That infrastructure is based on Ripple. Few assets will stand out as the backbone of value transfer when the world's financial system reboots. XRP is among such. By the way, this is the window for those who have been paying attention. The stillness just before the rush. At this point, getting ready becomes all about getting into position. Everything changes overnight once the trigger event occurs and the liquidity corridors activate globally. Read the XRP Millionaire Blueprint if you wish to be prepared for when the financial system enters its new digital phase. It details the procedures that institutions are currently using to position themselves for the change, the timetables that may determine the next decade of wealth creation, and how to position oneself precisely in front of the transformation. Support me by giving this video a thumbs up and subscribing to my channel so you never miss an update.